Hello and welcome to another update video about Ethereum. So with Ethereum, a lot of price sideways movement. This at the moment at least does not really look bullish at the moment, which means there is probably still another low to come. That is what the structure suggests after this 5-wave impulse to the upside, which peaked at 2020, and then this ABC structure down, basically a wave 1 and a wave 2. And ideally, I'm looking now for a possibility of a wave 3 to the upside next, which doesn't mean it needs to happen straight away. That wave 2 can still dip further and possibly all the way down to $1,000, even though sort of in the region between 1150 and 1200 would be ideal for me to make a new low and then move up from there. So we are in this ABC pattern. In the ABC pattern, we are in the C wave, and in the C wave, we are basically in the last leg. That's what how I see it at the moment. There is, of course, another more bearish option, but I wouldn't want to pull this, and uncover this until we break below $1,000. As I said to you before, below $1,000, we could easily go down to 880 and then 660. So that is basically the level at which the bullish case here will get much more or much less probable. Much more improbable and much less probable. So the view is that we are now in this 5th wave down in any of these scenarios. So this scenario that the wave 4 peaked here and the wave 5 started there, and then we made this ABC pattern. And the second one is that the wave 4 started up here and we are already heading down in ABC from here. Whichever way you're looking at it, it doesn't really make a great difference in the short term. They're all pointing to the upside, and we are still here either in the red count, in the C wave. Yellow C belongs to red 5, and then here we've got the subwaves 1, 2, 3, 4, 5. I'm nearly leaning to the purple count now, to be honest. The problem is that if I want the red count, then it needs to really sell off now straight away, because the wave C is an impulse, and we've already done, as per this count, the wave 1, the wave 2. So the wave 3 is normally the most bearish wave, but what's happening here is either corrective what's coming down here, or like a leading diagonal again. And then again, having a leading diagonal in a wave 3, I'm not sure, and it would need to sell off straight away. So I'm nearly leaning towards the purple count, which would give us a bit more time, or we could say, okay, this was a wave A, this was a wave B, and now we're heading down in C, and in C we have then 5 waves. 1, 2, we will also need to go down now, but the other card is a bit more, so it's pressing a little bit more. It needs to come down because it has taken more time, and the wave 3 should really start like that, especially after we've already seen a wave 1, the wave 2. This, what we've seen here, is more typical for a wave 1, not necessarily the beginning of wave 3. Again, which could also be a wave 1. I don't want to rule it out, but don't want to confuse you as well. So either way, they're both possible. But the for me, still points here to the downside. There is a bullish option as well, but for me, these two are key. What you just need to understand is that if we lose yesterday's low at 1290, I think we can be more confident that we are in the 3rd wave down. Okay, that we are generally going down. As long as we hold that low from yesterday, it is possible to construct a bullish count into this. That would be a breakout count, and we would say that at the 1220 level here from the 21st of September, a low was already made. And then we moved up in a 1, came down in 2, and we're now in the wave 3 to the upside. And you would see this as some kind of a bullish flag, which would break out to the upside. We would take the $1,400 level out. Now, $1,400 to break that would be when I would start to believe the green count. At the moment, it's very low probability. Above 1400, I would not necessarily make it my primary expectation, because eventually to make this count work, we need to get to around, well, we would need to get to the 1.618 extension, the 1490 level. Then we would want to see a wave 4 down, a wave 5 up, which would then be basically a wave 1 again. So it would look like this, wave 1, and then we would come down in wave 2. And I wouldn't do anything then until we fill in wave 2 and then scale in there again. Okay. Can the breakout be traded above 1400? I had a few questions. Yes, but that's entirely up to you. Yeah, I'm not telling you what to do. If you want to trade a breakout, which would be for me the $1,400 level, you can do it. Just be aware the risk is higher. Why is the risk higher? Because you're trading, you're going in quite high above support. So think about it. You have a target of 1490 for wave 3, and you're buying in at 1400 or maybe even a bit higher. But where's support? Support is down here. Support is 1290. It's the intraday low from yesterday. That doesn't really give you a great reward to risk ratio. Therefore, I personally always prefer to buy in support areas, not after breakout. If you trade a breakout, you have to manage your portfolio size, position size. Yeah, or set a tight stop loss, but then you have the risk that you get thrown out easily, because there is a good chance that there will be a wick or something below 1400. Just be aware of it, right? Just be aware of it. I have recently started to give my trades a bit more space, especially in the current environment, but then just scale down a bit with my position size. That's basically how you can do it. You can have a larger position size. A lot of people always go all in, which is not the way I would do it. But then you have to have a tight stop loss, which again increases your risk of being stopped out. I prefer to go down with my position size per trade to not lose or risk more than 1% of my portfolio in any trade, but then move the stop loss out a bit more. So if I go down with my position size, I can afford to lose more per trade, because it still would be, I mean, in percentage, I can afford to lose more, yeah, in terms of percentage loss per trade, because the overall position size is so small that it doesn't affect my portfolio. That's just how I do it. Yeah, the position size is small compared to the size of the portfolio, so that I can give my trade a bit more space, because we had it recently many times, and I think this is just how the market works at the moment, that there is just much more volatility. You know, the market tries to go to its extreme, like it did here as well, to the 1400 level, maxed basically out what it should do, the wave B, and then came down. So again here as well, you know, had somebody just had a stop loss just above the previous wave 4 high, might have been stopped out, right? So these are the things that we need to keep an eye on. Okay, but anyway, this is Ethereum. Maybe today we know more which direction we're going. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, please check out the channel membership. Thanks a lot for watching. Bye-bye.